What's up, guys? Eric here, Mr. Fired Up Wealth. I brought Snowflake to YouTube, had the first video about the IPO. If you were following me at all, I basically told you to tread lightly, that the stock was probably going to come back. The IPO opened up way higher than the original IPO price. And if you understand how the business works, there's a lot of insiders that own that stock for a lot less money. Now, the stock ran up to like $400 and it's come back down. It's now trading closer to 220. And I think it's starting to get more interesting. And I've got some information here. I've got an entire notebook full of notes. And this is from a couple interviews from leadership, as well as the last earnings call. And I'm trying to take all of the information that I have for you of why I'm bullish on Snowflake, and especially even here. It could go lower. I think it could easily go below $200. I always dollar cost average in. I currently own 80 shares of Snowflake, about at what the stock's trading at today. But I'm willing to own 300 shares. So I'm willing to own more if the stock comes down. And I think that is a possibility. So I want you to hear that first. But here are some reasons of why I'm very bullish for Snowflake in the long term. This is my case. I've studied this company in great detail, listened to every earnings call and interview I possibly can. I've read everything I possibly can. I've got hours and hours of due diligence into this company, and I want to share what I've learned with you and share why I'm bullish on the stock long term, and I want it to be part of my portfolio. Is it risky? Yeah, everything has some risk, but I think the risk reward for this company with the growth is good. First, let's just start out with the leadership, okay? Now, if you've heard of ServiceNow, that's a company that I invested in and made very good money on. So Frank Slootman, who's now the CEO of Snowflake, Frank Slootman, he used to be the CEO of ServiceNow. And coincidentally, well, maybe not so coincidentally, but Mike Scarpelli, the CFO of Snowflake, was also the CFO of ServiceNow, and they were very successful. In fact, they even worked together at another company that I'll talk about in a second, but let's focus on ServiceNow. Frank Slootman was the CEO of ServiceNow from April of 2011. He left in 2017. Mike Scarpelli was the CFO of ServiceNow from 2011, August 2011 to 2019. ServiceNow, when Slootman and Scarpelli joined ServiceNow, it was about a $100 million revenue company. They took that from a $100 million revenue company, $100 million in revenue, to a successful IPO to $1.4 billion in revenue. And I'll talk more about that company and the total addressable market. I still own ServiceNow. I still like that stock, but all the hyper growth is kind of in the past, and you'll understand more why as this video goes on. You're going to want to hear the rest of this video. Definitely subscribe to the channel if you have not subscribed. Would love to have you here. This is the kind of stuff that we do. My expertise really is around cloud and SaaS, but disruptive technology as a whole. And I use growth to outperform, take that outperformance and buy dividend stocks for retirement, financial independence, retire early on dividends. So before that, so Frank Slootman and Mike Scarpelli, they worked at ServiceNow. They worked together at Snowflake. And before that, they worked at a company called Data Domain. Now, Slootman was the CEO, and he took that from early days of that company, Data Domain, to a sale to a company called EMC for $2.4 billion. And guess who the CFO was at Data Domain? Well, September 2006 to July 2009, it was Mike Scarpelli. These guys have worked together since 2006. It's 2021, and everything they've touched together as a team has turned to gold. You can dig deeper in the leadership. There's great leadership across the board. Everybody on that leadership team, if you go to the website, has a really impressive background, impressive resume. Go check that out. I definitely encourage that. So, okay, there was an interview, and they talked to Mike Scarpelli, the CFO, and said, why did you want to come to Snowflake? And he basically compared Snowflake to the other companies and industries that he and Slootman worked in together. So disruptive new technology is what they've always focused on, taking advantage, in his words, taking advantage of shifts that were happening. So Data Domain took the old tape world and basically made it to a digital storage system. So it took old technology and took a trend to make it to new technology. Well, that's not new technology now, but at the time, it was a very big deal. Then they went to ServiceNow. That was all about taking legacy on-prem systems and basically putting that into the cloud. And that still is a movement, but now things are evolving to the next stage. The next stage for these guys is Snowflake. So there's been no innovation in data warehousing, is what the CFO said in an interview. And he said there's massive amounts of data and more data. The further we go into the digital economy, everything is about data, and just more and more data at these big companies. Snowflake allows these big companies, even small companies, to access this data and basically give that data to the entire organization, to all employees to use that data in a meaningful way. Okay, so what else? There's a lot more, and you're going to want to hear the rest because we're really just getting started. So another thing that Mike Scarpelli said in the interview, he said that they have long-term aspirations at Snowflake for data sharing. They want Snow to become the standard platform for all enterprises to consume data. I want you to pay attention to that last part, consume data. And I'll get to why in a second here. So, but back to the whole friendship between Slootman and Scarpelli. I mean, they are friends in real life. They have a great partnership. They have a successful track record. I can't think of another Batman and Robin duo. It's really unparalleled in their success. That alone should give investors confidence, but obviously not the only reason that you would buy, but certainly helps a lot. Leadership, in my opinion, as an investor is critical because your money is in their hands, right? So let's keep going. So he also talked about how people want to shift to the cloud faster and that basically we haven't even seen full acceleration yet. So a lot of people, including me, including the CFO in this interview, think that actually we'll see more acceleration after the pandemic for some of these companies than during it because they can focus more on the business. Now, that's not true for all businesses, but when you think of these big, huge corporations, I'll give you an example. The last earnings call, 19 new Fortune 500 companies, including Mastercard, were signed in the last quarter. A company that size, it takes a long time. You think of like a cargo ship. To turn that cargo ship around, it takes a long time. You don't just turn on a dime. And that is important. So these big companies, they have not fully utilized companies like Snowflake, and it comes back to data consumption. I'll get more to that here in a second. So they have 75 current migrations that in large strategic accounts, 75. And it takes a long time to move this data. Now, here's the thing. Snowflake is not SaaS. It is not software as a service. It gets thrown into software as a service. It is not software as a service. I'm going to show you a slide here from their investor presentation that shows you exactly what I'm talking about. Okay, guys, this is from their last earnings presentation. We are not a SaaS model. They want you to know as investors that they're not a SaaS model, which is interesting. 93% of revenue is consumption-based. 93% consumption-based. Revenue is recognized variably only as consumption occurs. In many cases, rollover of unused capacity is permitted. Contract durations increasing along with larger customer commitments. This kind of goes back to what we're talking about. You're going to see more earnings growth next year from this. Primarily billed annually in advance with some on-demand in arrears, and seeing a shift to quarterly in advance and monthly in arrears billing for largest enterprises. I'm going to say that one more time. Seeing a shift to quarterly in advance and monthly in arrears billings for largest customers. This is important stuff when you think about how their revenue is recognized and what it means for you as an investor for next year and beyond. Okay, so interesting, right? So what does it really all mean? Well, these are not even my words. I agree with it. But Scarpelli said, what does this mean? It means that revenues will be boosted next year in 2022 and in future years. That essentially they have not seen this revenue recognition yet from these large 75 strategic accounts. Well, that's really interesting as an investor to know, and it's not necessarily, unless you dig deep into an interview or an investor presentation earnings call, that not everybody knows that information, and not everybody can take that information and trust it. So you have to not only have that information, but trust that the CFO is giving you good information. Now, there's no reason for me to believe that he's not giving me good information because everywhere he's been on point. So for me, this means a lot because it's telling me that there's going to be even more. They crushed it their last earnings, and they're even going to do better. And it even talks about how their margins will never be the same as SaaS margins because they're not a SaaS company. They're about data consumption, but they will improve margins as the business goes on. So companies are realizing more and more that they have to be in the cloud. And there's 800 million Snow queries per day. That's double from a year ago. 800 million per day Snow queries, double from a year ago. And these workloads are growing. And the more these large enterprises get ingrained into Snowflake, the more workload there is, the more queries there are, the more queries, the more data consumption, the more data consumption, the more revenue. I think that the total addressable market is bigger than what people are saying, and I'll get to why I think that here in a second. He also said in an interview, all companies want to move to the cloud. He said, it's not a matter of if, it's a matter of when. And I've said this before in other videos, we're still in the early innings of cloud. We might be in the third, maybe the fourth inning of 9 innings. We've got a long way to go, and there's a lot of companies that still are on legacy systems that maybe are only on one piece, like a hybrid cloud, but there's so much more that can be done at big and small corporations. So data cloud, they're built for the cloud, in the cloud. Companies like CrowdStrike are that way, Datadog. And they have this thing called, this is big, guys. They have this thing called Snowflake Marketplace. Okay. So what it does is Snow actually gets a percentage from the customers to monetize data through Snowflake. So Snowflake's making monetization through this, but again, it's about consumption, not a software subscription type model. But the more these customers use this data and monetize the data to their clients, they get a cut every time. So the more money they make through the consumption. So they have 380 partners right now. For example, FactSet Data is one. They don't actually store the data. Another one that's really been a marquee is BlackRock's Aladdin. That's one of the biggest examples. This will be meaningful revenue, according to the CFO, in 1 year, and huge selling point to win more business. Because if you saw the marketing on that, it's now Aladdin powered by Snowflake, and they can use that. They give these customers a discount. So what it is basically that customers have this valuable data and they don't know how to monetize the data. And so because of this BlackRock deal, he said that tons of these big customers are coming to them saying, how do we monetize our data in a similar way as BlackRock? So they're having all these conversations with existing clients now, these big clients, about how they can figure this out. And it will take time. But he's basically saying with some time, in a year and more, you're also going to see more revenue come from this monetization of data through this other line of business, essentially, that is in its infancy for Snowflake. So to wrap this up, though, essentially Snowflake gets the payment. So the payment happens through Snowflake, and they get a cut of that. And that could be an important line of business for Snowflake down the road. And I think it's pretty exciting. Scarpelli also said that 20% of existing Snow customers share data in some capacity today, and which actually seems like a surprising number. And he said, though, that his goal, their goal, Snowflake's goal, is to have it 100%. So right now, 20% of existing customers share data in some capacity. Their goal is to have it 100%, and that it's Snowflake to be what they call a de facto standard. So sharing of data creates massive opportunity, and it's a huge competitive differentiator that's going to help them grow more business and power the business forward. If you're familiar with Snowflake and their tools, there's something called Snow Sites. It's basically a visualization tool, like a BI type tool, and it's free. It's part of Snowflake if you're a customer. They also have Snow Pipes, which is also free for Snowflake customers, and that gets data into Snow simpler. And what they're doing is it makes them look like they're really nice guys, and they're giving you this free stuff. But it comes down to, especially with Snow Pipes, they want you to get tons of data in Snowflake, because the more data you have in Snowflake, the more consumption, the more revenue. Everything they're doing is about consumption. Again, it's not a software as a service model, and you can look at that as a pro and a con depending on how you look at it. But the more this starts to unfold, the more it makes sense of why the business is just not appreciated in the capacity that it could actually grow into. And there is some speculation that it could do that, but the more you hear about it, the more exciting, at least for me, that I get. So what is this all about? So they want to be an open platform that can use something like Snow Sites, but you can use anything. So they'll let you use Tableau, Looker, any kind of tools for that visualization, because all Snowflake cares about at the end of the day is driving consumption. So they're creating APIs to let other, software vendors plug into Snowflake. They want it. The more open it is and the more pluggable it is, the more data gets basically driven into Snowflake and the more consumption. And consumption is what it's all about for these guys, okay? So this is what Scarpelli says in an interview. It says, as long as it gets data into Snow, they're okay with it. Basically going back to what I was saying. And here's the other thing that's really exciting. So Snow has been investing in some companies like Laceworks. Now, Laceworks has been mentioned in the Fired Up Wealth community. Why would they invest in a company like Laceworks? Well, this is really interesting and it makes a lot of sense. Laceworks is essentially built on Snowflake. And as Laceworks grows, the consumption grows and Snow benefits. So they're pumping money into these other vendors trying to help them grow because it's actually helping them. And to me, that's brilliant. I mean, this is where Slootman and Scarpelli together are just, they have this stuff figured out. They're veterans. They know the industry. They have connections. They know how to get stuff done. They're leaders that I would want to work for. I used to sell software and worked in this space, and I would love to work for a company, like Snowflake. I just think it's an exciting company, and the leadership is just unparalleled. So what it's really about with Snowflake is they have one product with different, he called it SKUs, but really lines of business. So they have compute, which is really their number one revenue driver. They have storage. They have data transfer, which is, it's really a small part of their business. It's about moving from one cloud to the other. And then they have the digital marketplace that we mentioned earlier, like with Aladdin. So this is how they're growing that consumption through these different lines of business. What they're also doing is they're giving companies better pricing if they allow Snowflake marketing to say powered by Snowflake. So BlackRock Aladdin, they can say BlackRock Aladdin powered by Snowflake, and they give them a pricing discount for that. But it's huge for brand recognition and basically marketing. And it's clever marketing. Instead of spending millions of dollars on a TV ad, boom, like that gives you instant clout and credibility. And it's just huge for name recognition and for their growth. Real quick, I do want to show you something. This is also from the investor deck. Here's their expanding ecosystem, just to give you some insight into how many different companies they work with. They literally partner and work with everybody. I mean, I was in this industry for 10 years and, you go to different conventions and conferences and things. And it's like, I know pretty much all of these companies. In fact, there's a few I don't even know in here, but you think of all the big ones, like for the SIs, the implementers, like KPMG, and you've got Infosys. I mean, there's just a ton of them. I could waste 20 minutes going through this. Capgemini, Deloitte, Accenture. You see all the logos on your screen, and I'll kind of let you see the top there. But lots of great partners. You've got your Salesforce, Google Cloud, your Microsoft Azure, AWS, your Tableau, your Looker, you're like on and on and on. This is their ecosystem, guys. It's huge, and it's going to help them drive consumption, which is going to drive growth, revenue, and good things for you as a shareholder. Okay, Eric, so what else? There's more, and it's good stuff, so stay with me here. So drive consumption. This is what it's about, driving consumption. He also talked about Amazon and Google, how they basically partner with those guys to help drive that consumption. There's also a comparison that was made essentially where Amazon and Google were very similar in their growth stages when they were younger companies, and they were trying to drive everybody to their core, basically drive everybody to the core line of business. And so I invested in Amazon and Google, many years ago, Amazon before Google. And I personally can relate to Amazon, just how Amazon grew its business. It was very focused on, they talk about in here, and I'll get to this in a second, but they talk about how they're focused on growth, but not growth by any cost. So basically smart growth. And I think Amazon was really good at doing that. They didn't just spend money to spend money. They spent money with a purpose, and they had a plan, and they always made that plan, come to fruition. So Snow is also another bullet point here. Snow is not just about large companies. So a lot of people think that Snowflake can only work at a large enterprise type business. Smaller companies are also benefiting and coming more and more into the Snowflake environment because it's about consumption, and they don't necessarily have to pay crazy fees to use Snowflake, and more of these smaller and mid-sized companies are figuring that out. Obviously, Snowflake is focused right now on going after the biggest fish, and that's what their sales plan is really going to be focused on. Why I bring this up is they do have smaller businesses that are using it more and more, and it's like a complete another line of business that Snowflake can put more energy into that they haven't really focused on too much at this point. And I think that's another opportunity for them as they, mature and build out and need more growth. And I also think, and this was mentioned in the interview with Scarpelli as well, Scarpelli actually says this, the total addressable market, is much larger than what most analysts give it credit for. And he didn't say it in those exact words, but basically this is what he was getting at. And he compared it to ServiceNow. And as an investor in ServiceNow, I actually agree with him because it was the same thing with ServiceNow. The TAM was grossly undervalued. So with ServiceNow, I was like, that company's too expensive. There's no way that, the total addressable market's going to be larger. The market cap's already the same as the total addressable market, but yet the company kept growing because what happened is that people couldn't necessarily put an accurate pinpoint or estimation on what that total addressable market was for taking those legacy clients and taking them into the cloud. The opportunity was much, much more massive than anybody really gave it credit for. And I think Snowflake is in the same boat now. And Scarpelli says it too. And to me, it's like, I don't just agree with everything he says every time, but I'll certainly look into it more and see if my opinion aligns with it. And it certainly does. I do think that the total addressable market is bigger than, I think many analysts give it an $80 billion total addressable market. Well, if the market cap of the stock's already $60 billion, you can see where people, especially value investors, are like, this is absolutely crazy. It's too expensive. And it is an expensive stock. The price of sales and everything is really expensive. But I think that the total addressable market is a lot larger than anybody can actually determine at this point. And that's where the speculation comes in, but this is what I believe. And what else? So one of the interview questions, what's your moat? Because that's important, right? So what's their moat? Scarpelli had two responses. He said that Snowflake was built from day one to share data in the cloud, and the only one that's built for the cloud. And I think that's important. I mentioned earlier with CrowdStrike and Datadog and some of these others, you think of like a Datadog built in the cloud for the cloud. Splunk, more of an on-prem, going more to that cloud ARR model. And you look at like, Ping Identity and Atka. Atka built, for the cloud, more modern company. Ping was more of the on-prem. And there's a lot of comparisons you can make in this software type space. The other thing he mentioned was multi-cloud. He talked about how Google says they have multi-cloud, but hasn't really proven it. And it didn't really give a lot of details, other than the fact that Snowflake believes they have multi-cloud and no one else really truly does at this point. They also talked about Splunk. And I want to bring this up because Splunk is one of my positions I've owned for a while. I did a video back in 2019 about Splunk and how they use machine learning and artificial intelligence and things like that. It was in a off the radar AI video, and you can check that out on the channel if it's of interest. But Splunk, so he asked about competition. So Splunk has this new thing where they're trying to analyze real-time data. Okay, this is something Splunk's getting more into. So real-time data is something that Snow is doing. So they do compete in that space. And essentially what Scarpelli said is that Snowflake augments some of the things that Splunk does, but it does not replace Splunk. And I got the sense that essentially they can coexist. And I felt like, he was saying good things about Splunk overall, or kind of giving it respect. So for me, it made it more bullish. And if you look at Splunk right now, this stock is way beat up. It's actually looking like it might be finding a little bit of a bottom here. It's at 133. This stock, Splunk, was a $225 stock. It's down to 133. I think it bottoms out somewhere between 125 and 135. The lowest I really see on a Fibonacci is something like 116 on it. So Splunk could be an opportunity here. I bring it up because it was part of the interview, and it's another holding I have and something that maybe some of you own as well. So Snowflake did cash flow break even this year, which is a pretty big deal. They also are doing things now and in the future with AWS and with Azure, so with Amazon Web Services and Microsoft Azure, for recognition of contracts. And what Scarpelli mentioned was that basically they just renegotiated some contracts to get a little bit better pricing from these guys. And they're going to do it again in 1 to 2 years. That's kind of the thing in this industry. It's like every couple of years you try to negotiate a better rate. But lower cost equals better margin. And Scarpelli basically is saying that their margins are going to improve as they go on. So they're also removing some costs. He mentioned optimizations and improvements that as they scale their business, they basically can scale that more effectively, and the cost will come down because you're paying the same amount for certain things that can scale to a larger revenue. He also said their goal is 75% gross margin in 3 to 5 years. Right now, it's about 70%. So he looks at only about a 5% gross margin, but that does make an impact, especially as their revenue grows. And he mentioned specifically, again, we talked about SaaS. He mentions that it will not be, as good as SaaS. SaaS has, gross margins of 85% a lot of times. And he mentioned that they'll never be at that 85%. They're trying to get to 75, maybe 80%, but they're always going to be a little bit under that software as a service model because they're more about that consumption. It's really, he says, it's really about storage and consumption, and also data sharing will help and could improve these numbers. So that whole data sharing model that we talked about, like with Aladdin. He also mentioned, and I talked about it a little bit earlier, that they're a growth company and they're focused on growth, but they're not what he called growth at all costs. So back again, where I thought Amazon always did a good job of investing strategically, these guys have proven that they can do that. They don't make dumb moves. And he kind of reiterated that fact on this interview. The field marketing is pivoted to digital. He also talked about during the pandemic how field marketing and even a lot of their sales, all their internal business meetings has really pivoted into digital. And he basically talked about how going forward, they were going to do their meetings with Zoom and not have those meetings in person. The only time they're really going to be allowing travel for their workers is really going to be salespeople to customers, where the customers want the salesperson to be on site. But all their internal training meetings and things like that, they did their sales meeting this year digitally. A lot of people didn't think it was going to be good, and a lot of people loved it. The reason for it is they felt like they got more out of it. They weren't, focused on screwing around at night and stuff like that. They got more out of it. They learned more, and they were able to record those sessions and basically reuse those for new hires, which actually, I think the reason I bring it up is I think it helps reduce costs, but it also helps their new employees get ramped up faster, which could help them, basically accelerate their growth a little bit faster as well. Some of the final comments that Scarpelli made in this interview is he talked about really the power of data cloud. And he said, network effect. Large migrations are much harder than people give them credit for. And basically Snowflake is the best at it, and they're going to continue to benefit from this trend and consumption. If you can't tell, I'm bullish on Snowflake. I realize that it's crazy expensive. It doesn't make sense for you if you're a value investor. I understand that. I do think the stock can go lower. Snowflake right now is trading at $218.67 a share. I have 80 shares. I'd like to have 300 shares. My cost basis right now is basically at par, a couple percent in the red, but I'm willing to add 220 shares. So if this thing goes to 200, 190, 180, I'm going to be buying all the way down. And eventually I might run out of cash, but I'm confident this company will be worth a lot more in 5 years. It's a long-term growth story. It's expensive. People are paying a premium for the stock for a reason, because there's lots of good reasons to be bullish on the stock. A lot of it comes down to the leadership and just people giving them so much credibility that, that made the IPO just ridiculous. Everybody wanted to be a part of Slootman and his team. So it comes down to that. But when you dig under the covers and look behind the curtain, there's much more than just the leadership. The leadership makes the engine run, but the engine is really good itself and all the pieces and the components of the engine. And they talked about competition. And I mentioned a little bit earlier about the multi-cloud and built in the cloud for the cloud. They truly believe that they're the best. And I realize that there's companies out there like Databricks and tons of others that compete in certain areas. I think there's room for all these companies to do well, but I think the way Snowflake is doing this, they're really kind of putting their claws in. It's probably not the best analogy, but they're kind of sinking their teeth in. And once these big companies, transfer all this data into Snowflake, it's not as simple as just like, a lot of people that maybe don't understand the industry, they think it's as simple as like calling up your cell phone carrier and canceling and going to another carrier. That's not how this works. It's a really hard, painful process. There could be a lot of risk with compliance and network security and all kinds of issues that you have to think about with these large companies, especially these Fortune 500 and the S&P 500 type companies. There's just so much data and so much information. It takes so long. And once these guys are in, it's not very easy to rip and replace. It's the same when you think about software. I used to sell Oracle. If someone's on SAP, it's pretty hard to go in there and rip and replace S&P and do Oracle. You can do it, but it's a tough sell because it's going to be expensive. It's going to take time. It's going to take money. And that was much harder with legacy software than say, the data warehousing piece of it. But I do think that this data warehousing piece is more complex than most people give it credit for. So I hope this video helps. Please give me a thumbs up. It helps the algorithm. It helps me. It makes me feel like I should keep doing these videos, that my time is valuable, and hopefully it's helping you. Drop me a comment because I really appreciate the collaboration with the community. Subscribe to the channel if you haven't. Check out the other platforms. I appreciate your time and attention. I hope you have a great rest of your day. Take care.